You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Pleased to join you here for this second episode of the new year. Already got some fun vol to sink our teeth into. Of course, you want to sink your teeth into it live, you know where to go, theoptionsinsider.com/secret club. And then, of course, you can always join in the live throughout this show, everything else we do on the network, the pro Q&As, the options oddities, the fun giveaways, and all the other cool things we have in the offing for the new year. And, of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do love to hear from all of you folks out there. We know you're legion, and we know you're all interested in volatility these days. So it should be an interesting episode. And joining me for this very interesting second episode of the new year. First, we go way down deep into the heart of Texas, where we are joined by the greasiest of the meatballs from land of the pit. He's tired, he's exhausted, he's fresh from Tradosaurus, and he's raring to talk some volatility. Mr. Meatball, welcome back to the program, sir.
Good to be here. Yeah, I can't wait for this show. This is what I look forward to all week, Mark.
And of course, your morning sessions with Undertaker as well.
That and my tombstone lessons with Mark Calloway.
We all need a daily tombstone pile driver lesson with the Undertaker himself. The luxuries of living in Austin. And then from Austin, if you say to yourself, to kick off this new year, I need a little bit of Matt in my life to analyze some volatility. Well, we did you one better. We brought you not just one Matt, but Matt squared. First, let's go off to the land of New Hampshire. It's that time of year again, listeners. Earnings season is about to pop off, so we are joined by the keeper of all the earnings volatility data himself, a.k.a. the Oracle of New Hampshire, a.k.a. Mr. Matt Amberson, the founder over there at ORATS.com. Mr. Matt, welcome back to Volatility Views for the first time in 2022, sir.
It's great to be here. Great cast, and I'm looking forward to the show, Mark. Excited.
Should be fun because we have Matt squared. One Matt was not enough to summarize the madness of volatility right now. We needed two. So we went back to the MIAX hot seat and brought back Mr. Matt McFarland, the derivatives product and biz dev specialist over there at MIAX Futures. Mr. Matt, welcome back to Volatility Views, to you as well for the first time in 2022, sir.
Thank you, Mark, and happy to be here and happy to be Matt number 2 today.
There's no order. It's just Matt squared. We combine you both together like Voltron. You are greater than the sum of your parts. As we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. We're going to get to all that, what's popping off right now in a little bit, but really quickly, because I said this is the first time both of these gentlemen are joining us here in the new year. Let's start really quickly and give them a chance to give us their thoughts on the mad, insane year of volatility that was 2021. Let's go around the horn in the opposite of the order we came. Let's start with Mr. Matt McFarland. Matt, what are your thoughts on the insane year of volatility that was 2021, sir?
Yeah, 2021 was definitely a very interesting year. Yesterday, actually, the Spikes index settled above 20 for the first time, just above 20 spot 34, which got me thinking, how many times did the Spikes index settle above 20 in 2021? And the answer is 97 times, or well over a third of the time it settled over 20. And against the backdrop of a market that gained 27%, that seems like a lot. And if you compare that to like 2019, another strong year for the market gained 29% that year. Spikes only settled above 20 17 times in 2019. So vastly, similar returns, vastly different vol environment. And I think that's, of course, the COVID effect that is persisting in the market and, continues to persist in the market into 2022.
Well, we can add another day above 20 right now, pretty much. We're about to. And, of course, a lot of vol squeezing back into the marketplace. We'll get to all that in a second. First, let's go back up to the land of New Hampshire. Mr. Matt and his team over there at ORATS, always running their models and crunching their numbers, always have their fingers on the pulse of all things vol. Mr. Matt, a crazy year is in the record books, 2021. What were, for you, some of the highlights and lowlights and takeaways from a vol perspective, sir?
Well, just to riff on what Matt just said, that's true, but there was a lot of volatility. So I'm looking at the historical volatility. We do a enhanced Parkinson measure, and this last spike went up to 1.5 times. But people are just buying the dip. So to me, it was whereas 2019 didn't pay for your implied volatility. This year you wouldn't have gotten too messed up because the historical volatility or the actual statistical volatility was quite high. So I think that was one of the themes. Also, just you just can't get this market down. It just the bears would get it, and then the bulls would buy the dip. And but there was still volatility, kind of going both ways. And then, as always, I like to look at the small stocks and see how that skews looking. Is the Robinhood effect still there? I saw a prominent vol writer saying retail is going to be dead. But according to my numbers, the skew is still quite high. For example, I look at the 5 delta implied volatility versus the 75 delta. So that would be a call. So that would be like a out of the money put versus the way out of the money call. Usually that's about 80%, that ratio. Now it's over 1 still. It got as high as 1.1 or 10% over even. So, they're still bidding up. And that's, I should mention that's the component weighted Russell individual names. So are the retail traders still having an effect? I would say definitely. I think that was one of the big themes that we saw in 2021, and that's still here. And dare I say, make earnings great again at the end of 2021. And I'm hoping that will be a theme for 2022. I don't know why I root that on, but it's I feel bad for the long volatility people in the earnings. So that's why, Mark.
We'll get to all those long vol players on the earnings front in a second. Yeah, looking a little better for them right now. But before we do that, let's go back out now to where the markets are right now as we kicked off the show here. A little bit of a different tale of the tape than what we've seen earlier in the week. The rest of the week, it seems like, the other major indices were perhaps rallying. Dow and S&P and NASDAQ was giving up the ghost. Today, it was the opposite. When we kicked off the day, we had Dow and S&P off, and NASDAQ was feeling its oats. As the day has progressed, the red has continued to creep across all of the major indices. Coming into showtime, as of a few minutes ago, we had the Dow off about 1.2%. We had the S&P off about 0.8%, and the NASDAQ in the red now as well, off a little over 0.5% as well. So the red right now, inescapable across the board. That means vol creeping back up. The Rock Lobster was just saying on yesterday's option block, I was tweeting in. He wasn't on it, but he was chiming in his comments. And he was saying if it's over 20 in VIX, that's when maybe we need to break out the Kenny Loggins. Maybe we're back in the danger zone, and we are back over that level again. Spikes right now, listeners, 20.9, up about 1.5 points from where it was this time last week. VIX cash is at about a 20.5 when we kicked off the show. Puts it up about exactly a point from where it was this time last week. VVIX back up to a nice frothy 123, listeners, up about 7 points from where it was on last week. The V spikes, so our vol in Spikes land, almost a 150, about a 149.7. It actually was down slightly on the week, about 2.5 points. I'm sure if he ran that again now, maybe that would be back up again. So a lot to unpack. Let's go out to the land of Texas. Mr. Meatball, sir, an intriguing week. Vol creeping back in on the screen, red on the major market screens. What is lighting up your tape, sir?
Yeah, absolutely. We had a week where the UVXY touched a new all-time low, and yet now we've got the VIX back above 20. It's just been pretty fascinating, and this all goes back to what's going on in ARK Innovation. Now, if you want to know when the market is going to sell off, just put ARK on the ARK ticker up, and when that thing goes red, the market's going to get soft, especially if the mega caps can't hold it up. So the way I like to think about ARK is as it pertains to the triple Qs. There are really two pieces of the triple Qs. You have 7 stocks that represent about 48% of the ETF or the index. And those 7 stocks are Apple, Microsoft, Amazon, Google, Facebook, NVIDIA, and Tesla. Then you have the other 93 stocks that make up 52% of the value of the Qs. And those are pretty much well represented in that ARK ETF. And so the ARK ETF, think of it as really representing the majority of the triple Qs, even if it's just a plurality of the value of the ETF. That's why during the week we've seen an ETF or an index like RSP, which is the equal weighted index in the S&P, actually not have a really rough week until today. And the Dow having until today really been the strong index out of the major indexes, and the S&P and the NDX just acting a little sick. Right now, the NDX is the leader of the indexes, and the reason being is it's got those mega caps that represent, again, 50% of the index holding up pretty well. Google's having a strong day. Tesla is up, and Apple's pretty much flat. And Microsoft, last I checked, is up. Yeah, it is up, and that is holding things up. And so we're going to have a pretty spicy VIX and VXN and UVXY and VXX until we can find a capitulation point in that ARK ETF.
Once again, Miss Kathy Wood fanning the volatility flames out there. Mr. Meatball, by the way, I was joking earlier about a Matt squared, but my keen-eyed producer reminding me we have Mark squared just about every week on this show. So we have Mark squared now. We have Matt squared. Dare I say it? We have 4M, perhaps M to the fourth.
M4.
M4. Whatever way you want to look at it, listeners. M4, 4M, Matt squared, Mark squared. A lot of M's floating around here on the show today. Let's get back out to some of those M's. Let's go back out to Mr. Matt McFarland. Matt, sir, what's been lighting up your tape this week from a volatility perspective?
It's been an interesting week. I think when we as my initial comments indicated, the strength or the underlying bid or the persistent bid that we're seeing in the spikes index is something that we'll see evidence through the options flows and the futures flows that we'll discuss later.
And Mr. Matt Squared over there, a.k.a. the Oracle of New Hampshire. Same question for you, sir. A lot popping off. I know you're always running your models to determine whether you think this current vol regime is real or maybe a bit of a blip. But what are your screens telling you right now, sir, for this current new level of vol back above 20?
I'm going to say it's getting real. So what that means is my numbers are heading towards concern. So, for example, just looking at the implied volatility, that's starting to creep up. That's one of the things I look at, just the direction. The contango is starting to flatten out. So as that front starts to go up, that's not a good sign. And then my flat forwards is one of my favorite. And again, I'll just give a brief overview of what that is. There are two ways that we calculate forward volatilities, and a forward volatility is, let's say, you have a 30-day and a 90-day. The 30-day has an implied volatility, the 90-day has an implied volatility, but there's a volatility that's between the 30 and the 90-day. So that's the forward 90-30 volatility. So you could calculate that with a formula that's pretty straightforward, or you could do this other way that the traders used to do, is put that into a time calendar trade and find the implied volatility where the 90-day and the 30-day line up. So where each of them have their own volatility and it matches what the market is. So we call that a flat volatility. And usually that is about 1, or at least consistent. So the flat is similar to the forward. But when the market goes under duress, then the relationship tends to fall apart. So, and just one of the things that we've found in our machine learning testing is this is a canary in a coal mine type of indicator, and it's starting to come down. It's positively correlated. So we're seeing that come down, but still right about pre-concern numbers. So if I could say, if things keep going the way they're going, it's going to get a little ugly. But right now we're in the pre-concern phase, Mark.
We're also in right now, Mr. Matt, is the kickoff to earnings season. I know it's your favorite, one of the few times of the year we can really dive deep into the mad numbers over there in the land of earnings season. I know for a lot of our listeners, earnings season, earnings volatility, a big driver of what they do out there in their trading. And we're kicking it off today, actually, really kind of the semi-official really kickoff to earnings season, listeners, because we have the big financials. We have names you've actually heard of popping off this week, listener. Today we have Citi this morning, we have BlackRock, we have Wells Fargo, JP Morgan Chase. So all of the big financials popping off, and they tend to set the tone, give us a bit of a barometer of what we're in store for. And right now, of course, financials very much in the crosshairs because the Fed's about to do their thing pretty soon. So that always puts the financials under the spotlight out there. Mr. Matt, though, I am pleased to say that so far, with a whopping 7 names reporting as of this morning when we ran these numbers, the season off to a rocking start, sir. 170% in terms of the vol being returned versus the vol that was priced in. What do you think, sir? You think we can maintain that for the rest of the season? Nearly 200%? That would be amazing.
Well, a little bit of that was some dangler option earnings that came in early in the week before the actual real start, but we'll still count those. And, JP Morgan, 116% actual versus expected move today. So I'm predicting a good season relative to what we've had for the option owners. We, of course, just to give a little bit of background on how we do this, ORATS comes out with we identify the amount that the market thinks the stock is going to move on earnings. So it's not just the straddle price, because you have to estimate what's going to be left in the straddle after earnings. So we have a way of doing that. And then we say, okay, that's the expected earnings. And then we track what the earnings is and do that ratio. And if it's over 1, the people that own the straddle win. And if it's under 1, the people that sell those straddles win. We had a horrendous post-COVID performance for the option holders. A lot of that is just the individual names weren't as important. We were summarizing, and plus the vol got high. A lot of COVID related high volatility. So for whatever reason, the earnings weren't paying off. But now earnings are important again, I think. People are more focused on it, and we're seeing more volume in a lot of these names, and we're also seeing quite a bit of movement after earnings. So and what we do is we break this earnings season down into 6 weeks. So usually the first week are these bigger names. Usually those aren't the very good names to own for option holders. So those have, we've done an average over the last 12 quarters, and generally the number of winners over losers isn't as good. But as you get into week 3 and week 4, that's when it gets a little bit spicier for the option holders, and that's when they usually do a little bit better. And then during the end of the earnings season, weeks 5 and 6, when the smaller companies come in, they tend to have high implied expected moves, and often the actual moves don't keep up. And then also what we've done is we've tested what's the best strategy to use. Is it buying straddles, selling straddles, or doing a time spread? And we've shown that the time spread is probably the safest and best performing one of those 3, and we've identified some way to use our metrics going into earnings to identify what those time calendar symbols might be best to trade. So we've been having a lot of fun with that, and our subscribers like that report, and of course the subscribers at the Options Insider could follow along after the fact, but they could at least see what we're saying, and if they're tempted to come in, we have it in time to trade on our site. So that's how I'm feeling about earnings this season. I think we're back again, Mark.
Meatball says it's going to be spicy. You're saying it's going to be spicy. A lot of spice in the offing, it sounds like, Mr. Matt, from a vol perspective. So just to clarify that, I'm looking at our last season's final report right now. We came in just under the wire at 99%. So we almost broke even. We had some rock'em sock'em weeks, obviously. We had 114% in week 4. We had week 6 at 119%. So there were definitely some outperformers. But it sounds like to you, Mr. Matt, you're thinking this next season going to be even better than that 99%, which is already the best report we had really since the start of the pandemic.
I'm saying over 1.
We're going to do it. We're going to actually make money. Vol buyers will have positive returns again.
Yes.
We have not seen that in some time, sir.
Make earnings great again.
There we go. You heard it from Matt. You heard it from the Meatball. Vol's getting spicy. You like yourselves a little bit of spice out there in Vol land. Where are you going to get it? Let's see how well you handle a little bit of spice with your Vol. Let's get into that Vol right now. Let's get out into the futures first, because things are interesting out there in the land of the futures. Let's start, Mr. Matt. That's where you hang your hat day to day. When you're not busy talking to me, you're out there busy drumming up all the business over there in the land of Spikes Futures. How are things rolling over there in the land of Spikes Futures to start the year, sir?
Spikes Futures are off to a really good start this year. This week in particular, we're having one of the best weeks in terms of volume that we've ever had. Monday, we traded over 7,000 contracts. Tuesday, about 6,000, 3,200 on Wednesday, 8,900 yesterday, and about 8,700 so far today with more than a couple hours left in the session. So volume really strong, market quality really strong. I think a key development that we've seen so far in 2022 is growth of open interest. So we ended the year open interest at just 165 contracts. As of the close yesterday, we're at 508 contracts. So while that's a relatively modest number, it's a pretty significant increase, and it's an indication that we've got new types of market participants in our market. So, up until now, it's generally been folks that go home without a position at the end of the day. But clearly now there are folks in this market that are holding positions. So getting a more diverse set of order flow into that market.
Always fun to see a more diverse set of participants. That, of course, means more flow. More flow in the futures, listeners, means tighter market out there in the options. We'll get to those in a little bit, seeing some paper out there in the land of Spikes options since our last show as well. But before we get there, let's go out to the land of the VIX futures. When we kicked off the show, we saw the VIX futures curve was mostly kind of hovering. The front portion of that curve was up about 1/10 of a point from last week. The Feb portion, so the second notch on that belt down the futures curve there, was actually still down a little bit, down about 1/3 of a point. That, of course, has probably ticked up a little bit since we kicked off the program. Mr. Meatball, sir, anything catching your eye or lighting up your tape out there in the VIX futures term structure this week, sir?
Yeah, interesting. We saw vol get absolutely crushed Monday and Tuesday, and then on Wednesday, market was up, but Fed futures just were flat on the day. They didn't want to drop. We didn't see a lot of downside pressure on volatility, and lo and behold, what did it lead us to? 2 days of kind of ugliness. We've dropped, call it 100 points in 2 days, which is 2%, not the end of the world, but a pretty, 40 points is not what it used to be anymore, folks. 5 years ago, that was a bloodbath. Now it's a sneeze. But we definitely, again, have this little pop in volatility, and VIX futures are not really reacting in a strong way, but they're definitely not completely fading this move as well. Again, feels like everyone is just waiting for the buy the dip moment, and we may need some capitulation before that happens this time. I don't know. If today ends up really ugly, we would set up for the classic Thursday, Friday, and then since we're closed on Monday, Tuesday, ugly, uglier, really bad, awful open to begin the week, and then make a decision from there. But that does set up with the way that we're trading right now. And is there potential for vol to go to 25 or 30? Yeah. Is vol acting like it wants to do that? No, not in the least.
Yeah, you're right. We are off Monday. With so much vol on the screen, so many things to talk about. We haven't even talked about the fact that it's a long weekend. Usually that's topic number one when we're heading into a long volatility weekend, is when they're going to come for this vol. Today, they're not coming for it at all. In fact, they're putting more vol back in, listeners, which, again, gives you a bit of context, a bit of flavors for how much vol we're seeing out there when we're heading into long holiday weekend and we're shooting up here from an overall vol perspective. Speaking of shooting up, we have seen the OI over there on Spikes options shooting up since our last show. Mr. Matt, it looks like our friends out there who like their four-way verticals are back in Spikes land. What did we see going up in Spikes options since our last show, sir?
Yeah, pretty interesting trade that went up on Monday in Spikes options. It was a January 2230 call spread. Customer going long the call spread and shorting the January 1820 put spread. So it's essentially a put spread financing upside exposure to the index, bullish on vol, break even level of 22 spot 30. Traded 500 times at a 30-cent debit. A couple interesting things about it. This one, I think the structure of it, getting that market protection and structuring it in a manner where you could get that market protection in a pretty cheap manner. And two, I think it's notable that, a sizable trade is able to be executed in Spike's options at a strong execution price. So as we roll into expiration next week, Wednesday morning, be interesting to see how this trade pans out with 2230 being that key level to watch.
Well, we were waiting for those size players to come back in here to start the new year. In Spike's options, we were also wondering which side of the fence they were going to be on. Were they going to be fading to the downside? Were they going to come back fading to the upside? It sounds like it's the latter, listeners. What do you think about that? You like that spread, the 18-20? Again, this is going out next week pretty much, so it's a pretty near-term trade at this point. 18-20 put spread financing the 22-30 call vertical. You like that? You like leaning north this way? You think this volatility spice we've been talking about is going to lead to some higher levels? Well, this trade could be well-timed if that is indeed the case. We'll keep an eye on that as we head on out now into VIX options land. For as much spice as we're talking about, much flavor as we're seeing heading into this holiday weekend, we're not seeing really a commensurate amount of VIX paper right now. 237,000 contracts on the tape. That's not a lot, even though the ADV has come down quite a bit. It's come down another almost 50,000 since our last show, listeners. It's down to 433. That puts it down 49,000 contracts from an ADV perspective since our last show. So we said it, once it got over 700,000, that level is nigh on unsustainable unless we're really hitting some apocalyptic levels in vol and things are really rocking and rolling. And we weren't quite there. So it seemed inevitable that the ADV was going to come in aggressively. And it has. It's come in about 300,000 contracts from that point. It was around 730. And here we are today, 433. So we'll see if this sell-off continues, if this spice continues to flavor the market out there today, if we don't see a little bit more paper later on in the session as we head into the weekend. Maybe some folks start panicking, start putting on some stuff to hedge themselves throughout this long weekend. Let's see what we have on the board going into the weekend in terms of the top positions. What is dominating the tape out there in VIX options right now? Cost you 101,000 contracts to break into the top 10 in VIX land, which is really not much, to say the truth. That gets you to, by the way, it is 60-40 puts over calls right now. So puts still leading the dance out there right now, though I wonder if after today's paper, maybe we might see a little bit of evolution of that. 101,000 of the Jan 25s on the tape today for number 10. Number 9, 104,000 of the Feb 18 puts. It is the first of 2 Feb positions on the top 10 today. Number 8, 106,000 of the Jan 20 puts. Then we get to a little call strip here. Number 7, 109,000 of the Jan 40s. Number 6, 113,000 of the Jan 60s. And number 5, my favorite, my personal favorite here, 115,000 of the Jan 70s, 70s. Probably a 60-70 vertical, but still intriguing stuff nonetheless. Number 4, 118,000 of the Jan 17 puts. We're pretty much back to all puts the rest of the time, listeners. Number 3, 127,000 of the Jan 19 puts. Number 2, our second and final Feb position on the list, 137,000 of the February 17 puts. And number 1 out there still, even with everything we're seeing right now, number 1 still, the Jan 18 puts, 169,000. If you know anything about VIX, that's pretty meager for the number 1 spot. So that shows, A, there's a bit of a diversity of opinion out there and what's going on. The volume is really spread out over a wide variety of strikes. And B, something else could easily jump into the top spots and usurp that 169 level pretty easy. In terms of today's paper, like I said, not a lot on the tape, 237,000 contracts. As of a little while ago, we saw the Jan 18 puts were leading the dance today with about 28,000 contracts on the tape. It was a distant number 2 behind it, but number 2 were the Feb doubles, the Feb 55 calls with 12,000 of those, followed by the Feb 18 puts, 12,000 of those as well. Feb double, 18 risk reversal. I've seen weirder things. I'm not sure if you want to put that premium to work buying the doubles, but hey, weirder stuff. The volume certainly seems to line up. I'll have to dig in and see if that is indeed a risk reversal. Yesterday, we didn't see much paper either. 376,000 contracts on the tape. Well, let's do a top couple here. Let's see, 39,000 of the the Jan 19 puts for number 1, 38,000 of the Jan 18 puts for number 2. So probably some roll and vertical action there. Number 3, we got 17,000 of the Feb 18 puts. Number 4, about 17,000 as well. The Feb 65. So some folks have some interesting bees in their bonnet for some upside strikes. Today, actually, we saw about almost 10,000 of the April 75s going up today. So we're kind of all over the place in terms of strike action out there. Wednesday was so far, actually, no, Monday took it slightly. Wednesday was number 2. Wednesday, 487,000 contracts. The most active print on Wednesday, the most active contract, the Jan 18 puts, 58,000 of those, followed by number 2, 46,000 of the Jan 20 calls. So there were some calls active on Wednesday. Number 3, Jan 17 puts, 28,000. Number 4, Feb 18 puts, 27,000 of those as well. Number 5, the Jan 19 puts for 25,000. Tuesday, back to the lighter side of the volume, 381,000 of the top contracts out there on Tuesday. 26,000 of the Jan 18 puts and 24,000 of the Jan 19 puts. If we go down to number 4, though, we got about 19,000 of the Feb 70s again. So there are some intriguing strikes, like I said, percolating in to the spicy realm of vol paper. Monday was the most active day of the week, even though it wasn't really blowing the doors off. 511,000 contracts going up on Monday. The most active contract yet again. It was up there pretty much almost every day this week. If not number 1, it was number 2 or number 3. It was the Jan 19 puts, 59, almost 60,000 going up on Monday, followed by the Jan 25 calls, 32,000 of those, 32,000 as well of the Jan 18 puts. And then number 4, Feb 18 puts, 22, almost 23,000. And rounding out the top 5 on Monday, 518,000 of the Feb 19 puts there. So an interesting day, if not the most active day we've seen in quite some time. Mr. Meatball, sir, anything catching your eye out there in the land of VIX options paper this week, sir?
Yeah, like you said, those 19 puts have been blowing up. We're seeing a lot of activity in the 18 puts. You mentioned that big risk reversal and VVIX getting a little bit of a lift. But we continue to see puts outpace calls, which, with VIX in the 20s, you just don't expect. They're not. Everyone is playing this kind of fade game in the VIX itself. And again, not a lot of volume other than those 19 puts, which have been really popular and traded. The 19 puts are 30 cents. They were $1.60 on Tuesday. It's amazing how quickly vol can move as we get into expiration. And again, yeah, just not a lot of volume in VIX itself over this week, despite the move up and down.
Yeah, the persistence of this fade, the persistence of this put trade, I admit, is a little perplexing to me as well. We're not seeing as many calls lighting up the top 5s as I would expect. And when we do, they are, I hate to say absurd, but they are ridiculous strikes like the Feb 70s. We have the August 80s going up, the Feb 65s, the April 75s. I mean, these are more active than the Jan 25s, for instance, on a given day. So the paper that is lighting it up out there to the upside this week is, I think, fair to say, a little bit head-scratching. Let's move on into the land of the products that usually folks are excited when they move to the dark side. This week, not getting that. In fact, as of a few minutes ago, VXX was literally unched on the week. It was at about a 19.25. Let's see if it's still hanging out there. A little bit up now, 19.35. So it's actually up about 1/10 of a point on the week out here, and actually getting some paper out here in VXX. In fact, this is another day, listeners, where VXX is putting up more numbers than VIX proper. So we got the tail kind of wagging the dog here. 320,000 contracts on the tape right now for VXX. So VXX kind of off to the races right now. The ADV still down from this time last week, down about 254, down about 8,000 from this time last week. But I got a feeling with these kind of numbers, we won't be seeing that trend for much longer. Let's get out there to the top 10 really quickly out here in VXX land. We got number 10. Cost you about 16,000 to break into the top 10 in VXX. That gets you to the Jan 26 puts. By the way, 60-40 puts to calls in the top 10 in VXX right now. Number 9, 16, almost 17,000 of the Jan 18 puts. Then we get to our first call, number 8, 17,500 of the Jan 22s. Number 7, about 18,000 of the only pre-split adjusted contract left in our top 10, the VXX1 Jan 12 puts. about 18,000 of those. Number 6, 18, almost 19,000 of the Jan 21 calls. Number 5, 21,000 of the Jan 30s. So a little bit of call love there. Number 4, 23,000 of the Jan 17 puts. Number 3, 23, almost 24,000 of the Jan 18 puts. Number 2, our final call in the top 10, 29,000 of the Jan 20s. And the number 1 position out there in VXX right now, the Jan 22 puts. Pretty much everything here, with the exception of number 9, the Jan 18 puts. Those are going out today. Everything else is going out next week, standard Jan. So intriguing, seeing VXX wagging the dog out there. Let's see what's lighting it up out there today. So far, looks like about 28,000 of the Jan 19 puts expiring today. That's the big winner out there. That's the most active contract, followed by the regular monthly 18 puts doing about 22,500, and the 17 puts doing about 19,000, and the 21 calls doing about 17,000 as well. So it looks like even though we're going out today, we're seeing a lot of the action still on the regular Jan. Mr. Meatball, sir, anything lighting up your tape this week in the ever popular, they're not giving us any downside this week, VXX, sir?
Yeah, it's amazing, right? We see the VIX go from 19 to 17 to 21, and VXX is down on the week. And that is just exactly why you trade this thing. You don't invest in it. You don't hold it. And yeah, we've got a lot of people today playing expiration. The 19 calls are active. The 19 puts and the 18 and a half puts also really active. A lot of people taking a flyer on those 18 and a half puts paying 3 cents, or the 19 puts paying 18. We've not seen VXX get to red on the day, even when SPX was briefly green this morning. So just real interesting the way the trading is. We're recording this in the middle of the day. The S&P is down 30 as we're talking. And right now, I'm still only 50-50 that we're going to end the day green, or if we're going to completely fall apart. We could be down 100. We could be up 40. I can't figure it out. And that is why VXX continues to trade the way it does, although I think it's a little mind-numbing that we're not seeing a lot of interest in calls. It's all put buyers today. The ratio in expiring puts versus calls at the money, the 19 and 19 and a half calls have traded a total of about 12,000, and the 19 and 18 and a half puts are at 47,000 while we're recording it. That is just, we're talking almost 5 to 1, and we have the market down 30.
I was only kind of half joking earlier about, the tail wagging the dog with VXX versus VIX, but do you have anything in your models, anything that incorporates that, Mr. Meatball? Do you put a special flag, a special indicator when we see VXX doing so much more volume than the mothership VIX, sir?
It's interesting. I don't have anything as it relates directly to that. Part of that today is because you have this expiration today. That's where all the volume is. And the expiration is a little easier to understand, but no, I don't have anything in terms of volume indicators. That's more of a Matt question, and I'd be interested to hear his answer because I'm wondering whether there is something to that now that you've got me thinking.
Getting the ball spinning over. That means we have to go out to the Oracle, New Hampshire. Mr. Matt, I know UVXY and VXX, not your favorite products out there. They tend to erode relatively reliably, except for weeks like this. But it is somewhat interesting to see effectively a derivative of a derivative product like VXX out there putting up substantially more numbers than the mothership VIX product. Does that throw a wrench into any of your works or models, or perhaps make you say, sir?
Well, no, actually, some of our most popular backtests are VXX related, and I think that's probably a lot of people are looking at that, and it's endemic of that. There's they're trying to figure out how to short these products that just go down all the time safely, and so. We have a lot of people backtesting. I've done a ton of backtests. So, these put spreads and then selling these call spreads, look pretty good in those symbols. Even when the market is looking pretty sketchy. Those names have been down, UVXY, VXX. So you can make some money if you have the right put spread, put diagonal, short call spread, short call diagonal. So that doesn't surprise me. We're seeing a lot of interest in those types of back tests, Mark.
Interesting. I wouldn't have guessed that VXX is your most popular. Would have guessed probably covered calls and a SPY or protective puts, something along those lines. But VXX, interesting. Your clientele getting pretty savvy over there, Mr. Matt.
Well, I think that retail loves these kind of fun symbols, I guess. I don't know, for lack of a better word. And, when they see something going straight down, they want to test it. And so, people understand that a SPY covered call, is not going to do that great. The call is not going to do that great versus just long stock. But they don't know a lot about, what is the best way to play VXX. So, it's like you said, there's a lot of moving parts. And, one of the great things about backtesting is just to be able to learn about something, see how it behaves over time, and then feel a little more comfortable about doing some of these trades, which we're seeing them do.
Interesting. You folks back testing VXX out there, listeners, hit us up. Let us know as we get on to VXX's crazier sibling, perhaps, crazier compatriot out there, which is UVXY. This is the one that usually tends to outperform to the dark side out there, listeners. And this week, a rare week where it's getting some back as well. When we kicked off the show, it was at about 1275. It was still down about a quarter of a point. And as we're coming into this segment now, it's almost up to about 13 and a quarter. So pretty much up back about half a point and it's pretty much up about a quarter of a point now on the week. It's a rare thing to see UVXY actually up. And again, going into a long weekend, listeners, a lot of heavy lifting to make these products go up on a day like today. And yet they are doing so. So that should probably also give you a hint as to how much spice is out there flavoring the market out there today. And in terms of action, UVXY also putting up some numbers. Its ADV is about 187,000 contracts right now. And so far, it's done 161,000. So it's probably going to blow past that level out there today. We'll probably see a higher ADV on next week's show. In terms of top positions, they are smaller still in UVXY, so we'll only do a top 5. Number 5 out there. By the way, the entire top 10 is 70-30 calls over puts. Calls have been outpacing puts in UVXY for some time, which is interesting. Of all the products we talk about here, this is probably the one you'd expect that the least. But we've also talked about how there are some interesting pockets of premium to be harvested up there on the upside. And it seems like some folks are discovering that, strikes like number 5 here, the Jan 75s. We go out on a limb and say people probably aren't buying those. And if it passed as prologue, people are selling those. Number 5, 11,000 of the Jan 75s. Number 4, we've got 12,000 of the March 50s. Again, probably overriding these bad boys. And as we've talked about on the show, it's kind of been a less heralded trade, but a pretty decent one. There's more upside juice to be found in these than you might expect. Again, the top 5, 4 of them are calls, listeners. Number 3, 12,000 of the Jan 15s. Number 2, 12,000 as well of the March 70s, 7-0s. And the number 1 position out there in UVXY, the only put in the top 5, listeners, 14,500 of the Jan 10 puts. Again, these are monthly Jan, so they're going out next week, not today. So that is interesting. If you had told me the top 5, 4 of them would be, shall we say, optimistic strike calls, I would probably have said that you were mistaken, but that's what we're seeing out there today. Interesting stuff. I've been meaning myself to go look at those upside strikes a little bit more in UVXY, and one of those things I haven't gotten around to yet, but clearly other folks have. In terms of today's paper, we've got the Jan 13s going out today, about 11,000 on the tape. And again, we're hovering right around that 13 strike, so not entirely surprising there. And then the Jan, regular monthly Jan, going out next week, about 10,000 of those as well going up today. So those are leading the dance today, followed by about 8,000 of the 12 half puts going out today, and the 13 puts, about 7,000, almost 8,000 of those as well today, also going out at the end of the day. Mr. Meatball, a rare week when UVXY is up on the week, even rarer to have it up going into a long holiday weekend. And on top of that, a trifecta, we've got of the top 5 positions, 4 of them are extremely out of the money calls, sir.
Well, we see a lot of those extreme out of the money calls that trade from people that don't seem to understand how UVXY works. I don't know why they do it, but they do. Again, it touched an all-time low this week. and now it's up on the week. Just shows you how quickly vol can move around if you're not nimble. This is a great trading product, but not something that needs to be constantly in and outed, held overnight unless you're going to be sitting on some puts. Expiration volume pretty high today. We've got some serious buying on the 13 puts, and then buying of the 13 calls as well. Decent volume there, and then there are some people taking a flyer on those 12.5 puts. They're 4 cents, and there are some people saying, "Hey, what if we turn around? We could make a pretty penny on these 3 cent options."
I was making a pretty penny is on these crazy upsides. While you were talking, I pulled up the March 70s. There's about 12,000 of those open right now. The most recent active day for them that did about 2,500 was back about almost a month ago on December 20th. And they sold over 2,000 of these for $2.75, Mr. Meatball, the March 70s, which, again, kind of gets back to what I'm saying. There is more surprising levels of premium than you might think on some of these strikes. Hence why it looks like the predominance of this paper is selling, and the March 70s leading that dance as we keep on rolling. It's time to do, listeners, the most difficult, indeed the most dangerous dance of the program. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we break down what the heck the vol gods have on their radar for the coming week. And recently we've been getting more difficult, listeners, more dangerous, because we've been going out to the end of the year. You think it's hard predicting VIX in a week, listeners? Try going all the way out to the end of the year. It is challenging. As we come into the end of the show, listeners, VIX continues to get spicy, continues to get frothy, north of the 21, almost 2110 level out there in VIX cash. Spikes at about a 2063 as we wind down the show. And let's see our prognostications. So for this week, I was at an 1830. I was feeling the most vol of the bunch, and it was insufficient, listeners. It was a holiday weekend. I thought it would be hard to get too much lift on vol. It looks like the vol gods are defying that. Again, we're about 2 points north of that in spikes and about almost 2.5 points north of that in VIX. The Rock Lobster is feeling a lot less vol, 1710, and Jim Carroll was at a 17.5 for this time last week. So nobody was feeling, Options Queen looks like she was all right last week. She had about a 20. Looks like she was the only one who was even remotely close. And even that, I'm sad to say, Miss Options Queen is well outside our 10th of a point margin of victory. You guys know the drill right now. Keep those prognostications coming in if you want to play, listeners. So there were no winners for this week, I should say. So that means our poll for next week is wide open. I think we're going to kick things off in the Matt Squared territory. Let's start off with Mr. Matt. Mr. Matt's the Oracle of New Hampshire, because he's been busy crunching his numbers all episode long, getting ready for this moment. Mr. Matt Amberson, A, what is your vol prediction for this time next week? And then B, if you'd like to be doubly dangerous and join the rest of us who ventured off of that cliff last week and make a prognostication for where VIX and spikes will close at the end of 2022, have at it, sir. A double whammy.
So like I said, I think we're getting into a little bit more dangerous territory. We're starting to rally a little bit right now, but I'm going to say, let's say a 22 this week, and the whole year a 15. Round numbers.
15 for the end of the year. Let me put that in here. End of the year for Mr. Matt. I like that's a little bit lower than I think I was close to a 17.5 level, which is not that far actually from where we closed this year. And I think, as I recall, I'll have to pull up the actual results, but we did our VIX poll for you folks, listeners, and we asked you where you think VIX is. Here it is. VIX will close for the end of the year. And you guys were in that same range. You were at that 15 to about 20 range, got about 42% of the vote, followed by about 28% for below 15. So you danced around Matt's levels there. 18% for elevated, 20 to 25, and north of 25, 11.68%. All right, let's go out now to the other half of Matt Squared. Mr. Matt M., sir, what is your prediction for vol next week on the show? And then B, if you want to get dangerous, What are you feeling for VIX and or spikes at the end of the year?
For the end of this week, spikes. I'm gonna fade this bid we're experiencing today. I'm gonna call 17.5 for spikes next week. For the year, I'm a little bit higher than that. Call it 18.25 for year end.
Interesting. So a little bit more juice than you might think, but also in the level we're clearly higher than right now for the end of the year. And for next week, fading it. So fading next week and then getting higher. And Mr. Meatball, sir, you did not prognosticate last year, so you did not get to play along. So last week, I should say. So first off, what is your pick for this time next week? And I'm not sure. Have you gone on the record with your end of the year VIX prediction? If not, have at it, sir.
Well, as you know, I have to fade my book, which means I'm going a 22.5 for the VIX for next week. And for the year, Matt said 15.
Yep.
All right, I'm going to go 14.99.
Oh, that was great. So 22.5, right, half above me, and then a hundredth below me. Sweet.
There you go. You get all the dark side now below me.
I'm carping you like you wouldn't believe.
Why don't you just do an iron condor right around me? 1501, 1499.
Oh, that'd be amazing.
There we go. Just take it all. I like it. The iron condor. Speaking of which, we got people debating iron condors and iron flies in our chat. Looks like they're liking the 24, 27, 30 call fly in VIX for next week for 15 cents. That'd be interesting. 24 strike. It's obviously a cheap flyer. We'll find out pretty quick on two. You got 1 day for that trade to play out. It's a 1 day trade, right? That's why it's so cheap. But if you like a flyer, I guess there are crazier ones out there than that. Speaking of crazy, it's time to get crazy now for my vol prediction. So we're at about a 20.75 in VIX and looks like about a 20.5 in spike. So I'm going to feel frothy for this time next week. I'm not sure if we're going to be at the level that we are right now. So you know what? I'm going to say 19.5, a little bit below where we are, but still frothy, still elevated for next week. You already know my prediction for the end of the year. So that's our book for next week. Listeners, we got 17.5 on the dark side. We've got Mr. Matt M. Then we've got Mr. Matt and the Meatball jostling around each other for next week and for the end of the year, just carping each other shamelessly. And then we got myself coming in at a 19.5. What are your prognostications for next week? And if you haven't gotten your end of the year prediction in, I'll be nice. I'll be charitable. I'll extend it a week for you folks as well. Get in there. It doesn't cost you anything, and maybe you win some fabulous prizes. So get out there, make your prediction, have fun, see how challenging this thing really is. All right. That music means we've come to the end of an epic journey through the world of volatility. I want to thank our guests, the Matt Squared duo. I like this. Matt, they have a Matt Squared return appearance. What do you guys think?
Let's do it.
All right, let's do it. And let's go around the horn. Let's start Mr. Matt A., a.k.a. the Oracle of New Hampshire. Sir, you mentioned all your earnings season and trades and analysis reports. If folks want to check that out, maybe they want to embark on some VXX back testing of their own, sir. Where should they go? What should they do?
And we just blasted out our new stock scanner, Mark. Can you believe that? So we option scanner go and the stock scanner. Are there any other Matts in the industry?
There are the boys over there at the Mullet and Tulum over there slinging the VIX futures. We can bring Matt Thompson on.
Oh, yeah.
Matt Cube.
There you go. So, yeah, ORATS.com, Matt at ORATS.com. Any questions? Great show. Always learn something from the Meatball. Loved his first tirade. So thanks a lot for letting me on.
And Mr. Matt M, sir, if folks want to learn more about all things spikes, the futures, the options, the index, where should they go? What should they do?
Best place to go is MIAXoptions.com/spikes. All kinds of information for you there. And you can reach out to me directly as well. Matt McFarland, M. McFarland at Miami-holdings.com.
There you go. Hit him up. If you have questions, you can reach out to him directly. And of course, you know where to go to learn more about all things spikes. MIAXoptions.com/spikes. I see you in the chat there, Luigi, accusing me of scummery again. 1975. I think it just goes to show, Mr. Luigi, you've been listening to our shows for a while. You're kind of getting on my wavelength, so you're jumping in where I'm going here. So I think it's the other way around. I think you're subconsciously scumming me here a little bit here. Quarter of a point difference. That's actually pretty wide for us. We've been very much simpatico of late. And Mr. Meatball, if folks want to maybe check in and see what the heck was going on with Tradosaurus or anything else you guys have cooking over there in the land of the pit, where should they go? What should they do?
Yeah, go to optionpit.com. I'm putting out quality content every day on VIX volatility. And if you're not reading it, you're missing out. Optionpit.com and register for the VIX Edge newsletter.
Can they get recordings of the Tradosaurus /Trade Fest?
Yes, we'll send you the replay of our all-day Trade Fest that we did on Thursday the 13th.
Soon to be rebranded Tradosaurus, correct? Because
no.
Let's face it, way cooler. Tradosaurus, optionbit.com is the place to go. He loves when I futz with his branding, listeners. And on behalf of the Oracle of New Hampshire and Mr. Matt, the Major Domo of all things futures at MIAX Land, and Mr. Meatball, and indeed myself, a.k.a. 4M. I want to thank all of you out there for downloading, streaming, and subscribing. And we'll see you back here a little bit later in the Secret Club for all things options, oddities. And, of course, we'll see you back here next week, another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.